What's up guys, welcome to episode 8 already of the PA course. Into this video we're going to talk about something very important, and that's how to chart. With how to chart I mean literally how do you open up a chart and look at your levels, your zones, your liquidity zones, whatever zones where you can possibly take a trade, because that's very important. If in the past 5 episodes I learned you guys the setups we use, how to execute them, TP, stop loss, entry, tips and tricks, literally anything. But for 4 out of the 5, maybe even all of them, having your levels right is very important. So that's what we are going to talk about in this video. Like and subscribe as always, I would really appreciate that, and let's get into the video. So before I start, to avoid confusion, this video is going to be finding your levels to trade, so day trading, not about swing trading or investing, also not about scalping on the 1 minute or even 3 minutes, though we can execute on the 3 minutes, on the 1 minute, but you get what I mean. After this episode 9 will go about investing and swing trading with price action. So that's where we're going to talk about higher time frame levels and how to do a higher time frame analysis with price action. So let's start with the basics. I'm going to explain a couple of things, and then later in the video I'll actually chart a coin, Bitcoin or Ethereum, probably myself, and then you can look at what levels am I looking at, but I'll explain those levels first, of course, as well. So when you open up a chart of a coin or asset you want to trade, don't go on the 1 or 3 minutes, zoom out first. And with zoom out first I mean completely on the weekly. And it's not that important for me for my levels, because levels are levels, but for example Bitcoin has been in a massive downtrend over the past 200 days, more than half a year. So on the higher time frame a reversal is less likely to happen, because we're just in a massive downtrend. So maybe I want to look more for continuations down than where every bottom can be a reversal. But as mentioned, that's more about the setups and not really about your levels or execution. But still, before you chart or before you trade, just look at the global direction on weekly, or just the very big time frame of what's going on that asset. So after that, you can zoom into the 4 hour or surely the 1 hour, because we want to trade, or levels won't be from 2018 or somewhere. So go on the 1 hour, and as always I say start with the highs and lows. Very simple. The highs and lows are not the most important levels, but surely for beginners, if you're new, just mark out the highs and lows, and you don't have to scroll back and look at this high and this low. No, locally. So locally this is a low. I don't think I have to explain it, because I can't actually explain. This is locally low, and of course here locally this is a high, but you may argue that the full top of this local range is this. But you can mark them both, it's all good. And of course you can also mark this low, of course, and maybe also this one. So these are the highs and lows of our current range, of our current zone, because we're in this for almost a month, so this is a pretty good range to day trade. Now highs and lows, and of course always include the wick. Highs and lows are good for continuation trades. As mentioned in the previous episode, continuation trades are basically when price is in an uptrend here, it gains this level strongly and then pulls back, and then on the retest you can enter to go higher. Because when price gains or loses in the other direction, a high or a low, that clearly indicates we're going to another range, and the price is really pushing, because in a high there's liquidity, there are buy sell orders, liquidations, etc. That price is really pushing and making a move in a certain direction. But for other trades like reversals, move to the high, loss retest trades, etc., we're not really going to look for highs and lows. We're most of the time going to look for either holds or failures. And if you paid attention in the failure setup trade video, you know that almost every hold is a failure, but not every failure is a hold. Very important to realize that. So for example, this is the low of this local piece of price action, but that is not the hold. The hold is this, and because I have a lot of experience I can just see this and I don't have to do my security checks, etc. But to do it very slowly for beginners and other people, this is your low here. What is your move to the low? That's this level here. This is the last time price retested and made the low. Where do we gain it? Here. Where do we create the hold or the retest? Here. Now if you go on the higher time frame, so let's look at the 4 hour, then the move to the high is here. So you may argue that this is the move to the move to the low. Where do we gain this? Here. We retest, and this is the hold. And those are both holds, but just on another time frame. And at the start that might be confusing, but I would say for now you're not trading on the bigger picture because the higher time frame analysis, that's not what we're doing, more about it in the next video. So we're going to do the 1 hour time frame. But same thing, you might say, oh, we're looking at 1 hour to 50 minutes. If I go to the 50 minutes, let's look, yeah, this is the move to the low. Where do we gain? Here. Where do we hold? Here. So this is the hold. So yes, you have to fine tune your levels, but I would say just look at the hourly and the 15 minutes. So then you can potentially make a box. Sometimes I also like to make a box because this is a box, but this is not a big range. This is 20%, 0.20%. This is not going to determine if your trade is going to be a W or an L. But I'd always say base your levels of the 15 minute and the 1 hour. Surely if you're not scalping or if you're not trading on the 4 or the daily, just the 15 minutes and the hourly for your levels. And what I just explained, I'm on the 1 hour time frame to look what is price is doing, and then I can zoom in on the 50 minutes. So we have our box here. The box disappeared, but doesn't really matter. So that's our hold here, the hold zone. This is a price where if price drops here, we might look for a long, a reversal, or if it were a more important level, an origin trade, whatever. So I want to do also a quick checklist for all the setups. So continuation trades is most of the time the exact high or the exact low. Can also work with other levels like the hold or failure, but we can also say confidently that highs and lows are a bit more important there. Then we have move to high loss retest. That's of course when price creates move to the high, loses it, and then you retest it. But still, we prefer that price first sweeps an important level. Then you can also use holds and failures. And of course, for a reversal, you're always looking for a hold most of the time, and also can be inverted, of course, because if you invert the chart, this is your high. Where is your move to the high? Move to the low. This one, this green candle. Where do we gain it here? Where do we retest here? So let's remove the high and the low for a second. These are your most important zones in this region. You have your failure here, or your hold if you invert the chart, and you have your hold here. So that's what we're looking at to trade reversals or trade continuation with that, but mainly reversals. So I hope that was a bit clear, the difference between highs and lows, and then of course the failures or the holds. And what is also important, you may argue that price gained something here, create a hold here. Let's indicate this. This looks interesting here because price went up, created a retest. Let's indicate this. Here, price lost this level here. Of course, this green candle is also interesting. Don't do that because you have now in this range of 8% is a lot, but you have 1, 2, 3, 4, 5, 6 different levels. That's almost 1 every 1.2, 1.3%, and that's possible if you're scalping or in other strategies. But for now, we're day trading. We're not going to take 100 trades in a day or take every trade the best possible. So just don't do that, because maybe this is a valid level and price could perfectly do this and react from it. It's possible, but those are lower probability, so you surely want to skip it. If you have more experience and more data, and you start recognizing more like this type of style, if you have like this type of bottom, then this zone here is also useful. Then you can indicate it, but for the start, this is not like the probability is not there, so leave it out. Your chart doesn't have to be a mess. So I hope it's clear, because I also don't want to waffle too much, but I hope it's clear. One last time, first look at the highs and the lows, and more specific, the failures and the holds. And like I did in the video, if you find it hard to identify the hold when price goes down or the failure, just invert your chart. You can do it on TradingView. Right click here on the price, then you see invert chart, invert scale actually, and then you see just inverted. It may look weird at first because you see green cans going down and red going up, but you'll get used to it. Now let me go over to Ethereum actually. Ethereum, maybe the levels are still open. Let me close that and actually do the same analysis here right now, but a bit quicker, and also I'll still explain why, of course. So first, of course, I know on top of my head Ethereum is also in the big downtrend. It doesn't really matter. We're in this range, and with this range I talk about this. Does that really matter? We're in this range, or you might say, oh, this is the range. That doesn't really matter. But what am I seeing here on the 1 hour? We created a low here, right here. This is our hold right here. And what I mentioned is that with experience and what you have to feel, you may argue this is the hold, so this level here is not really that important. But you see, price really had a massive impulse here, so this is also a level where price could pick up some liquidity. Now, if you look to the other side, you have the failure here, but that already got tapped, as you see, so that's not really useful anymore. You could still leave this level there, but I don't know. You could still leave it there, but I'm not probably not going to take a short here. So that's almost it in this range. I know it's a big range. It's a 12% range, but Ethereum has been volatile recent days, as you see. One day, even 12 hours, half a day, 11%. So when price has big impulses, you have less levels. If price has been ranging a lot, then we have for maybe 4 or 5 levels in a 6-7% range. So that is it. If you zoom out, of course, we have more levels here. And what is something very important if we have a big downtrend, where to look at levels? Because you might say, what level do I have to look at? If this is the high, this is the high, this level, it's just one waterfall down. And this is a very juicy tip I'm going to tell you guys, which works in price action. And I don't think, yeah, sorry that I'm bragging, but this is really valuable. I don't think many other traders are giving this information for free. Look at where price created an entire new low, and then where price failed to gain. I'm going to draw it first, and this is a bit off topic, but still want to mention it. Let's say price is really waterfalling down. And let's look to the left. So price has been maybe in an uptrend before, did this. And since this point here, so this is a very important point because it's a failure of the uptrend. Since this point has been reeling down, reeling down, reeling down, reeling down. What level do you take? You might argue this, or this, or this, or this, or this. Of course, they will all show maybe a kind of reaction, but we're looking for the highest probability, of course. Then you have a look at the previous low, and there's not really an example from, is that low from the past days, past weeks. I'll give an example on the charts in a minute. This, where did you create a new low? That is here. Where did you fail to make new highs and stop the downtrend? That's here. So here is your most important and most probable level. It may sound complicated, but it really isn't. If I look back here, this is the low of this full previous range. So let me indicate it. If you look back here and we see we really crushed it, but then where did we break it? Here. Where did we pull back? Here. So this is a very important level. You can remove this, of course, of all of this, because if I didn't tell you this trick, or if I didn't know this, you could also say this is the most important, or this, or this, or this. That's a very important trick. And you can do the same trick here. Maybe zoom in a bit more on the 1 hour. So we make a new low here. Where do we lose it? We lose it there. What's the failure of this move up? That's right here. So here we have another level. But of course this one is more important. That's why I also like to make it a bit thicker sometimes. I most of the time remember and I can see it pretty quickly, but I like to make it a bit more clear that it's a more important level. So I hope this video was clear. Of course I already know this, so it's hard explaining it for really beginners, but I think if you watch the other episodes and you understand that this was pretty, maybe not easy, but understandable, and you can really handle this information and can actually start charting yourself. So if I tell chart this coin, or this is how I chart with to chart, I mean drawing the levels and looking at an asset. As mentioned, this is very important because if you don't know what levels to look for your trades, you can know all the theory about all those different setups, but you can't find your entry because you don't know where to find your entry, because you might think, oh, yeah, let's entry right here, but there's no probability there. But for now, that was it actually. If you're more interested in swing trading or on a higher time frame for investments for longer periods of time, surely check out the next episode. It's going to be about investing on the higher time frame, about how to swing trade with price action. But for now, that was it. I want to thank you guys for watching. Hopefully I brought you something, because this is again very important. I hope I did well, because without this information you're still behind everyone else. Bye.